Hello from Ottawa. I'm Zaeira Yakova with MetroCity Property Group, and today I'm with my good friend and real estate lawyer,
Adada from Kelly Santini LLP.
Today we wanted to share information with you about the vacant unit tax in the city of Ottawa. To give you some background, about 330,000 residential property owners will have to declare whether or not their property was occupied, tenanted, whether an immediate family member was living in there, or if it was left vacant for more than 184 days. To give you some background into why this initiative has been brought into place by the city, across the country in Canada, according to the 2016 census, there was more than 1.34 million properties that were empty or temporarily occupied throughout the nation. And out of that, 22,000 in 2016 were in Ottawa. So keep in mind, since 2016, the population of our city has grown dramatically, and the housing crisis has also grown. We don't have enough housing. So the city decided to implement this program as part of their More Homes 10-year plan. And we're going to go over some of the implications today, some of the exceptions, and really define what it means if you have a vacant unit, okay? So the vacant unit tax, like we said, started January 1st, 2023, and it applies to properties that were left vacant for more than 184 days. But it does not apply to you if it is a principal residence, if the property is tenanted, if the property was occupied by a family member, friend, or other resident using it as their principal resident, and properties that qualify for any one of the available exemptions. So Sarah, what is the definition of a vacant unit?
So a unit will be considered to be vacant if it has not been used as a principal residence for an aggregated amount of 184 days in the previous calendar year. Of course, the tax only applies to properties that are residential, and this excludes, of course, commercial properties, industrial, and multi-residential properties.
Okay, so like a fourplex would not apply in that situation if you have but if you have a duplex.
It does apply because duplexes are still considered single-family residence, whereas a fourplex would be considered a multi-residential property. So the tax would not apply to those.
Okay, perfect. Now, when we talk about the tax amount, I know that the city is using a formula. So they're saying that the annual vacant unit tax is the vacant unit tax rate times the assessed property value. So we talk about the assessed value, but the assessed value is what the municipal property assessment corporation is saying, not the value that you paid or sold your home for. So what is the tax amount? How is it calculated?
So as you mentioned, it's 1% of the assessed value by MPAC, and that is added to the property tax amount that you pay every year once the property is considered to be vacant. So this is why it's important that you do submit your declaration on time so that you don't face a surprise when you do pay your property taxes in the middle of the month of June.
So it'll be billed on the June bill. Mm-hmm. That's good to know. Now, what is the fine if there's a late fee, if the deadline is missed? And when is the deadline?
So the deadline is March 16, and if you don't submit your declaration by then, there is a $250 penalty fee. And then you do have another extension, another chance for those who have been late to submit it on time. Then the latest that you can submit your declaration, once you've been notified of this, is April 30th.
It's so important. The reason that they're giving a second deadline of April 30th is if you do not fill out this declaration, you will be charged the vacant unit tax based on the assessed value of the property. And then you'd have to go back and appeal that decision because either you forgot to declare it, or maybe you did have a tenant in there, or it is a principal residence. But if you do not make that declaration, you will be charged the vacant unit tax. And then there are ways to appeal that. And if you want more information on this, because we are going over the high-level details, further information is available at the link below and on the city's website as well, where you can find the form to fill it out. Now, we know that there's a fine of $250 if it isn't filled out on time. We know that it's 1% of the MPAC assessed value of the home, not the market value of the home. Now, there are exceptions that have been put into place, and these exemptions ensure that owners with valid vacancies are not unfairly taxed. So, for example, if I'm a snowbird and I like to travel and live in Costa Rica over the winter, and then I come back to Canada in the summer to my principal residence, I would still have to make a declaration, but I would not be paying a tax for that, even if it was for more than 184 days.
Exactly, because you use it as your principal residence still, and you will regardless submit the declaration on time.
Perfect. And then what are some of the other exemptions that they've put in place?
So the first exemption is if you're selling your property, then the vacancy would not apply in the year of sale, provided that the transfer took place was towards an unrelated individual or corporation. The second exception is if the homeowner is in a long-term care facility. It's of course expected that they will not be able to do so. Same thing in the case of death. And then another exemption would be court order. So if the property has been deemed by a court as uninhabitable or cannot be occupied, then the homeowner would also be exempt. Another situation would be if the property is undergoing redevelopment or extensive renovations, and of course you cannot occupy it. If the property is a cottage rental, and of course if the property is being occupied by tenants. So those are the exemptions where a property would not be subject to the vacant unit tax, and it would not be expected that a declaration would have to be submitted.
So for the renovation piece, for example, it has to be a renovation or upgrades that deem the property unoccupiable. So the city could come back to you at any point in time and say, for example, Sarah, you say that you are going through renovations, which is why you're exempt from the tax. Thanks for making the declaration. But you know what? We're going to need proof of permits. We're going to need proof of work that was done to validate that it was in fact not livable during those renovations. Now, in case of the death of the owner, so it is not taxable in the year of the death of the owner, but the following year, it would be taxable so long as the property hasn't exchanged hands to a new owner.
Exactly, to an unrelated individual or to a corporation.
Very good. So that gives you kind of like a high level overview of what the vacant unit tax is, some of the exceptions, how much it is. For more information, you can visit my website at zaeirayakova.com or reach out to us at MetroCity Property Group. And the key to making sure that you are not at risk because you've missed this information is to always work with professionals like myself and Sarah Adada from Kelly Santini, because our job is to do research, keep you informed, and keep as much money in your pocket as possible. If you have any questions, reach out to us. We'd love to help you. I'm Zaeira Yakova.
And I'm Sarah Adada from Kelly Santini.
We'll see you next time.